So, Kate, have you got another speaker for me?
Yeah, we've got Tom Sosnoff in the room.
Hey, Tom, can you hear me?
I can, John. How are you?
I'm great. Always good to see you again. Why don't you go ahead and get your PowerPoint up, and I'll give the introduction here. Tom Sosnoff is a recognized online brokerage innovator and sought-after financial educator. Tom is a true visionary and serial entrepreneur who co-founded thinkorswim in 1989, tastytrade in 2011, and a newly launched tastyworks in 2017. Leveraging over 20 years of experience as a market maker for the Chicago Board of Options Exchange and one of the original OEX traders in the S&P 100 index pit, Tom pursued a vision to educate retail investors in options trading and to build a superior software platform and brokerage firm that specializes in options. Its efforts ultimately changed the way these instruments traded by pioneering everything from single-click complex trading functionality to multi-product access from a single platform. Currently, Tom is the co-host of tastytrade Live, continues to drive innovation and know-how to the do-it-yourself investor. And I can vouch for Tom's tastyworks trading platform because I use it myself, and it's one of the best platforms out there. It's certainly very easy to use, light on code, and lightning fast. So Tom, interesting year, isn't it?
It absolutely is. It absolutely is, John. It's not what I was thinking, coming into this year. I was all set up for a little bit of a bear market thinking, hey, we're due, but I've been set up every year like that. And this was, I shouldn't actually, let me start over again and say that nothing surprises me anymore, but I definitely wasn't looking for what we've seen.
Yeah, I was looking for a 10% correction. The board basically turned it into a 20% correction. And we're getting there tortuously, one down leg at a time. So you have until 5 minutes before the hour. Tom has also kindly brought in staff to answer questions in the chat box while he's speaking. And he'll go through how his tastywork platform works. So Tom, I'll be back 5 minutes before the hour.
Awesome. Thanks, John. And thanks, everybody. I see there's a few hundred people on. That's just great. Just like John said, we have Liz and Jeff. They're both part of our trade desk over at tastyworks. They're on. I'm not even looking at the chats. I wish I could. I wish I was a strong enough presenter that I could look at the chats when I'm giving a software demo, because it's cool to call out people's names and answer the questions. On the one hand, it's kind of cool. On the other hand, it can get distracting, and sometimes I feel like speakers will focus on questions and not focus on what they want to talk about, and therefore the lesson or the discussion's not nearly as interesting or robust as it should be. So again, Liz and Jeff are on. They'll answer your questions in real time. Nothing is off limits at all. We have kind of a rule here at Tasty. Nothing's off limits, so ask any question about anything. And if they don't want to answer, they don't have to. But if it's trading related, we'll answer anything. So feel free to fire away. And just like John was saying, this has been an incredibly, it's been a pretty amazing start to the year. I think on many different levels. I don't think any of us thought we were going to be, come January or the beginning of this year, I don't think we thought we'd be, war was part of the scenario. In 2020, I don't think we were thinking pandemic as we started the year in January of 2020, and in January of 2022, I don't think we were thinking war. So the market always catches you a little bit by surprise, or a lot by surprise. And the question, I think today, and one of the things I'm going to focus on with respect to this discussion, is how do you trade in a market when implied volatility is super high? Let's take a look for a second. We'll just pull up VIX. And as we look at VIX, this is just a chart of the VIX. It's just in case, for whatever reason, you've been trading and sleeping under a rock or something and not really watching what implied volatility has been doing. We have reached levels that we rarely reach. And I think I did a piece this morning, a research piece this morning, and I think 8 times in the last 35 years, we've reached this level. So we're not talking about, once every 4 or 5 years, that kind of thing. Not very often. This is the implied volatility of the S&P 500. When I first started trading, I'm going to date myself because I'm a dinosaur. We would use when we talked about volatility, we use the volatility of the S&P 100. Nobody trades the S&P 100 anymore, so it's the S&P 500. But this is the VIX itself, which is expiration-based volatility, and this is VVIX, which is volatility on volatility. You see, it's come off a little bit the last couple of days, but not that much. And then what we mostly quote here on Tasty when we're talking about volatility, we'll quote the volatility futures, because the volatility futures are essentially like a spot market. So it's what's happening today. The VIX is like looking out to expiration, but the volatility futures are what's happening today. So when you see them down here, it says down 1, and it's a $30 index, and it's down a full point. That means volatility is down just over 3% today. That's risk off. Because what is volatility? So volatility is just, it's a formula. It's part of a Black-Scholes formula built around option pricing that essentially gives us expected move. So on the Tasty platform, if I wanted to look at something like the S&P 500, like SPYs, and I go to the trade page on SPYs, you can see over here, this is the implied volatility of each month. And so right now, if we're mostly trading April. So the implied volatility in April in the S&Ps is about 30, right around 33. And to put that in perspective, like long-term volatility trends are around 18. So volatility is trading almost twice as much as kind of historical, norms. And when you look back, or historical mean, when you look back at historical mean, you say, okay, twice as much. So what does that mean for the next 30 days? Well, for the next 30 days, it means a $25 move higher or lower in the SPY. Here's the SPY right here. It's a $425 index. It means a $25 move higher or lower. And on a scale of 1 to 100, it's ranked right now at almost 74. That's about the highest you're going to see S&P volatility as far as a ranking goes. So the takeaway here is markets are nervous. There's a lot of fear out there. Volatility is a fear index. So if this is your first Tom discussion, welcome. Glad to have you on board. Love these webinars. I do as many as I can because I think they're super valuable. And sometimes I do them after the close when it's a little bit harder to do stuff because not all the markets are open. But today it's cool because I have until 12. I'm in Chicago. I have until 12:55 Central Time, and that gives me, a solid 45 minutes to go through a lot of different markets with you and see what we can come up with to potentially to trade with all the markets being open. Today we've had a nice rally. S&Ps over here, I'll show you. Tasty's built around watch lists. So S&Ps are up 65 points. Nasdaq's up almost 300. Dow's up over 400, and the Russell's the laggard today, only up 11. And here's the VIX right here. This screen here is actually, I put this as my default watch list, but you can see here, it's all futures. So basically I watch all futures, and if I scroll down a little bit eventually, I'll get to a bunch of stocks. But like most traders, and I was a professional trader for 20 years, I'm now consider myself a retail trader, and I'm not nearly as good as I used to be. I made my bones in this business as a floor trader, and I spent 20 years as a market maker on the floor of the CBOE. I made markets in the S&P 100. From the date of inception until I left, I never left that pit. I at one point decided that I thought the business was going to change and that market makers were going to be replaced by servers. And I was right, except I wasn't really sure what a server was at the time. We had just got laptops. But all that said, we guessed right. We built a company called thinkorswim, which is still one of the best platforms in the world. It's now, we sold it to TD Ameritrade. TD Ameritrade sold out to Schwab. It's now Schwab's primary platform. It hasn't changed barely in 20 years. And it's what we built in 1999 and 2000. And the team that built thinkorswim, I put the team back together again, and we built tastyworks and tastytrade. Tastytrade is our network. tastyworks is our brokerage firm. And we basically support, and we look at our role as we're the facilitators of opportunity. So whatever it is you want to trade, go for it. Have some fun. You want to trade stocks? Go for it. You want to trade options? Go for it. You want to trade futures options, crypto? Go for it, go for it, go for it. And it doesn't matter to us. We also want to facilitate any strategy you want to do in any account type. So another nice thing about Tasty is single account, trade anything you want, regardless of account size, and everybody gets permission for everything if you request it. And so we don't have any of the crazy restrictions that other brokers have, and our fees are ridiculously low and everything is capped. So there's just a lot of advantages to trading at Tasty. Most important is we don't limit you. We don't restrict you from what you trade. We don't limit you. So how does somebody take advantage of what's going on in the world right now? I mean, this is it's a little bit of a scary time. It's also a very interesting time in the sense that it's very opportunistic. We have an incredible number of equities trading at prices that I don't think people thought we were ever going to see. I mean, we're back to pre-pandemic levels on, I think I read about 75% of the NASDAQ stocks are back to pre-pandemic levels, and about almost over 50% of the S&P stocks are down to pre-pandemic levels. We've had a secular bear market we've had a very broad bear market inside of a kind of a benchmark market that hasn't gone down that much, meaning the S&Ps and NASDAQ as a group being held up by the top stocks haven't gone down that much, but the broad markets really suffered. And there's a lot of stocks out there that have gotten incredibly cheap, and they're interesting. I'm not saying they're too cheap. I'm just saying, hey, they're interesting. Let's take a look and at some of the different ways that somebody might want to play a market like this. So let's pick a few stocks just that, and I'll take a look at. First of all, if you have a market that you think, maybe I'm not saying that prices are at extreme lows, or there's, this has to be bought or that kind of thing. I'm just saying, hey, if I was to look at the market right now and I was to find a stock that was an inexpensive stock with low or with high volatility, let's take a look at a couple. And I haven't looked at any of these stocks yet today. For starters, let's look at something like DraftKings. Now, I bring this up because I was really interested in this stock and following it a lot, trading it on and off from probably 40 to about 75. I think it got up to about 100 at some point. It's down to $15. It's way under its IPO price. It's ridiculously cheap relative to where it's been trading. I'm not a technician. I don't use charts for anything, but I don't think you have to be a rocket scientist to see, okay, it's on its butt. This isn't a very ugly, you call it whatever you want. There's probably been 12, we've probably broken through every level of support in the history of technical analysis, but it doesn't make a difference. It's $15 stock, that's all. And it's been killed. So how does a new subscriber, as Joseph Granville used to say, challenge DKNG, DraftKings? I have a tiny little position here now. I'm short some puts. It means absolutely nothing. Let's see, the implied volatility is 105. What does that mean? That means, and if you go all the way out for a couple of months, it's still really high. 100% implied volatility means that over the course of the next year, The stock can either be up 100% or down 100%. Now, realistically, assuming DraftKings is a real company, the likelihood of DraftKings going down 100% to zero is pretty minimal. So let's give it some random number. Let's say it goes from 15 to 7.5. I think everybody on this discussion today would be comfortable saying 7.5 is a pretty low number for a $15 stock that just came down from 100 or from 75 or whatever number you want to use. And $7.5 is a pretty good floor. Perfect. Stock's trading 15 and change, $7.5 we've just assumed is kind of our floor. So on the downside, we have $7.5 of risk. On the upside, 100% volatility means, and this is just a straight translation, means, hey, it's got $15 of upside, period. That's how the market, that's how the option prices that are tradable are actually pricing the upside move. So in this marketplace right now, we're saying, okay, $15 of upside and $7.5 of downside. We can approximate it, we can guesstimate it, we can play around with it, however we want. But the reality is you're risking one to make two. You're risking one to make two because we've assigned a 7.5 floor and a 30 top on a $15 stock. So you're risking one to make two. So it's interesting to me. The IV rank, where does this 105 measure over the course of the last year relative to this level of implied volatility? And the simple answer is in the 90th percentile. That's about as rich as we're going to get. The next thing we're going to look at is we're going to say, okay, that's neat, but I understand if stock might be up $15 over the course of next year or something, but where am I going to be maybe a month from now? Let's say May, 60 days out, 2 months from now, I'm sorry, May, 60 days out. Where can I be in here? What's the expected move? And the real answer is based on the numbers, and this is all built into the Tasty platform, $3.91 is the up-down expected move. So the stock's trading at 15, up-down expected move, which is always going to be equal for purposes of the pure numbers. This is an open variable built into Black-Scholes. Let's just call it $4. So that means we're going to be, stock's either going to be trading in a range from 11 to 19. And if you like the upside here, you have to kind of like the ultimate 2-to-1 odds, but just so you understand the range, it's 11 to 19, okay? That's kind of cool too. So now that's for May options. So now we'll open up May options just for the hell of it. And we'll take a look. We've thought about pricing and we've said 11 to 19. That's where everything's built in here. Now I'm using that as context, okay? I'm using 11 to 19 as context. So the first thing I'm going to do is say, hey, all right, how tight are the markets in May? And I'm going to look here and I'm going to say, oh, they're pretty good. Puts are 2 cents wide. Or 3 cents wide, whatever it is. That's pretty good. Volume's decent. And we already know volume's decent, so open interest is decent. And what kind of things can we do? Well, the first thing that interests me is, and because I like stocks that are on their butts with high implied volatility, because then you put yourself in a position where, you know, again, we're all focusing on risk reward. So if I sell the 12.5 puts at, let's just say, just under $1.20, so I sell the 12.5 puts at 118. That takes my break even down to right around 11.30, right? And we talked about $4, or actually it's actually $3.91. If you subtract $3.91 from 15.30, you get to 11.40. If you subtract 118 from 12.5, you get to 11.30. So for context here, this number, these puts, are perfect because they're right outside the range context-wise, and that's how you set up a short put trade. You find a stock with high IV rank, with high implied volatility, you take the expected move, you subtract it from the current price, and you make sure that the premium you're collecting for the option you're selling is still going to be a positive P&L if it gets to the lower end of the range, and this number is going to be good 70% of the time. That's just math. So everything we do at Tasty is math. So I'll put an order in to sell a 5-lot, a nickel above. Let me just move this over. A penny above the 117 price, and I'll enter it and just see if we get filled. Now that's my offer there at 118. That's the bid, 117. I just wanted to see what was, you know, sometimes if there's a buyer out there somewhere, maybe they do something with it. If not, we'll just leave it in there and see what it gets, if it gets filled in a couple seconds. That is exactly how we do filled. Took a while, but somebody needed it and they eventually paid for it. So now we sold a 5 lot of the May 12.5 puts. Let me take you through that just one more time so you understand kind of everything that I'm thinking, and you can see all the different things that are built into this platform. Let me get rid of this little thing here on the end. Hold on, I'm just gonna get rid of the Zoom let's see, you're sharing, stop share. No, I just wanna move out of the way. Okay, so on Tasty, if you wanna sell a put, hold on. On Tasty, if you want to sell a put, you click on the bid price, and then down here at the bottom of the page, it will show you probability of profit, 67%, the amount of extrinsic premium that you're collecting, that's 5 times this contract size of 118, gets you that 585. The probability of making 50% of max profit, or in this case, 50% of max profit, or in this case, about 60 cents, is about 80%. The delta on this trade, so 5 option contracts equals 122 shares of stock in DKNG, which I can definitely handle. And the beta weighted equivalent to the S&P is almost 10 shares of SPY, just to put it in context. All right. So I'm going to set this trade up again at 118. I'm going to hit confirm and send, and it's resting in here. Now, tastyworks is the only high frequency trading platform available to retail customers anywhere in the world. That means our middleware piece is all built on the same high frequency technology that high frequency trading firms do, the market making side, because we partnered with a market making firm to build this technology, and it's incredible. It's fast. Just like John said originally, it's lightweight, it's fast, and everything trades off the same interface. So I just got filled on the other 5 lot. Now I've sold 10 of these puts. That's a little bit of a bullish play. How bullish is it? Well, you saw before, it's about 120 shares of DraftKings. So I did 2 5 lots. So that's about 240 shares of DraftKings at this level right here, about 1535. It's the equivalent of about 20 shares of S&Ps. Now, why would somebody sell a put as opposed to buying a stock? And the reason that you sell a put as opposed to buying stock is because instead of having a 50-50 shot, I have a 70-30 shot. And instead of having a 50-50 shot of making, money in the next couple of weeks, I have an 80% chance. So you give up some of your upside in return, because remember, by May, the expected move is almost $4. The most I can make is $1.20. And I'm probably only going to make 60 cents. So what I'm going for is that opportunity to make 60 cents on with that 80% probability in that same time period if I'm right directionally, but I'm giving up upside in return for higher probability of success. It's also far more capital efficient because you only have to put up a little bit of money, only about 20% of the strike. So in this case, you're only putting up about $250 to make the trade. So the return on capital is quite high, and it's all about capital efficiency. But what would be some of my other options if I wanted to get long DraftKings? Well, another option would be, okay, so when stocks are cheap and volatility is high, then the other go-to strategy for most retail investors is a covered call. So why would somebody do a covered call as opposed to a short put? And the answer is because a covered call has a little bit more upside than the short put. Let's take a look. So if I was to buy stock, let's just say I was to buy stock, click on the offer. And then in this case, you want to go to one of the nearest out of the money strikes. So in this case, it would be the 17.5 calls. And they're trading for, let's just say, the bid price is $1.65. The offer is $1.69. Before we got filled both times in the middle. So let's say about $1.67 is probably around where we get filled. And what's the difference here? Well, on the short put, selling the 12.5 puts, at 118 where we sold them, what we stand to make is somewhere between 60 cents and $1.20, realistically. If you buy stock if we buy stock right here at 1544, wherever, and you sell this call here, your opportunity is the difference between 15.44 and 17.5. Let's just call it $2 plus the premium you collect, which is another $1.67. So you can make, in this case, almost as much as $3.50. So on the one hand, your max profit is $1.20. On the other hand, your max profit is 3 times that in this case. And that's why people do covered calls. You'll put up 2.5 times as much capital, and your probability of profit will be, it'll be over 50%, and your P50 will be over 50%, but it's not going to be dramatically higher. Okay, it just depends, and just covered calls are kind of weird when it comes to figuring out probability of profit. Usually it's about 15% higher than buying the stock outright. So if I was to do a covered call, it's the same interface, it's the same discussion. The price here, the mid price on this is $3.75. As you can see, I just routed it. 500 shares of stock, sell 5 calls, but I'm probably never going to get filled at the mid price. So I'm going to hit replace order, and I'm going to go in between the markets and see, oops, I'm sorry, I went the wrong way. I'm buying this thing. See, sometimes even I mess up still. Okay, so I'll work this thing for a few seconds and see what happens. I'm actually right at mid price right now. So, and I want to get filled actually because I want to keep talking. I'm just showing you how easy it is to adjust price on Tasty. You just go into the right-hand gutter, which is this, we call this area here the right-hand gutter. And there's cool things in here too. There's a little quick chart if you want to see a chart here. There's quote details if you want to see more information about DraftKings. There's, oh, filled. Okay, nice. So we got filled in between the markets again. Tasty routes to, I think, 7 different markets, 7 different high frequency market making firms. And I think you'll love the smart router that we built into this platform. It is fast, and it will search for, obviously it will search for the most competitive marketplace and then route to the exchange with the most competitive marketplace. We think we have one of the more advanced order routing mechanisms ever built for options. So what I've shown you so far is, and I will take you over here and kind of give you this little example. Here's the last 3 fills in DraftKings. This is what we just did. We did a covered call, and we sold we did 5 covered calls, or 500 shares, and sold 5 calls. We sold 5 puts, and we sold 5 puts. These are the last 3 trades we made, and they're all right here in the same column. Now, the beauty of Tasty, okay, the beauty of this platform is you can see everything on one page, and there's no other pages. There's nowhere to go. There's nothing else to do. I mean, of course, there's tons of other stuff on the platform, but if you don't want to use anything else, everything's right in front of you all the time. It doesn't matter what you trade. So your filled orders here, if you want to see just working orders, they're right here. Canceled orders, other stuff that you might have been, customized. Your positions are right here. Your quote details are in here. Your little chart here if you want it, or you can watch our network. All of the execution stuff is in here. As soon as you pop in an order, everything will pop down here as far as your Greeks go, and your watch list is always on the left-hand side of the page. That's kind of neat. Now, let's say, okay, well, that was an interesting discussion on DraftKings, and I see how you got long in there. I'm one of the few people that in this business that run a firm, but at the same time, I also trade my butt off every day and usually make, 100 or so trades a day. And so I use the platform, and I can promise you, I'm probably the only CEO in the industry that trades on their own platform all day long. And I do it because I need to experience what everybody else is experiencing all the time. It's important to know. I don't think anybody else in this business even trades, let alone knows how to use their own technology. And so I work on building this technology, and that's why we've built the best trading platforms over the last 20 years that you've seen in America. So let's take this kind of one step further and say, okay, that's kind of cool, but with all the conflicts going on right now, with whatever's happening around the world, take me to some, let's talk some other markets. Let's talk some stuff that's going on. I mean, we've had some huge moves in gold. Let's see. Right now, gold's down $30 today. We've had some huge moves in crude oil. Let's go from DraftKings and let's take a look at some commodity markets that most people are scared to look at or talk about or do anything in that regard. I don't have an opinion right now in crude oil, and I don't have an opinion in gold. So let's take a look first at gold, and let's see which is more interesting. Is gold liquid? Yes, it's traded 194,000 contracts today, and futures contracts are much bigger than, than shares of stock and things like that. So how's the IV ranking here? Not bad, 48. The S&Ps were, almost 76, and DraftKings was 90, but not bad. The implied volatility in gold, a little bit low. It's 23 relative. That's why that number is not crazy. But gold's had some pretty big moves. And gold, you could argue right now if you wanted to, that after this huge runoff, gold's come back down nicely. And for some people, they may like, okay, I've been following gold. I was hoping to get a chance to get it down, closer to 1900 rather than 2020 where it was a couple of days ago. This is an interesting spot for me. Maybe I'll nibble, okay? But before we do anything in gold, we're going to go over and take a look at crude oil /CL. Look at the crude oil chart just for a second. It looks very similar to gold. These are risk-off positions. Risk on, going to, potentially horrible conflict, humanitarian disaster. We have a crazy person on the loose. And so gold goes higher. Crude oil goes higher. Until they figure out different levels of acceptable risk premium, both of these underlyings trade much higher. The last couple of days, they've come down. Volatility has come down a bit. When we look at the volatility in crude oil, we can go to OVX, and you can see here the last couple of days, they've taken down the implied volatility in crude oil. I can't move it, unfortunately. Oh, there we go. Thought it had something to do with Zoom. So the implied volatility in crude oil has come down pretty significantly in 5 of the last 6 days. And so the question is, is there a play in crude oil here? Let's go back to crude oil. That's volatility of crude oil. Here's crude oil itself. Now, it's traded actually, crude oil, fewer contracts than gold today, which is surprising. But the IV rank is 60, so it's a lot higher than it is in gold. And as you can see over here, the implied volatility is in the mid-70s. So crude oil is kind of interesting. Now, it's come down from 130 to whatever, but maybe there's a nice little play in here in crude oil. So let's take a look. I'm going to open up April options, and there's still 30 days to go. And this is the kind of thing where I might want to do something that's very conservative and do like a wide strangle in here that I feel like doesn't have too much risk, but maybe I'd like to pull in, I don't know, maybe like $2.50, something like that. So I'm going to look at selling the 77 puts. They're $1.20, and the delta on these is around a 12. There's not too much difference between any of these deltas. Let's just call it a 12 for now. And then I'm going to go over to the call side. There's going to be a lot of call skew in here, and I'm going to go over just to start with about the 12 or 13 put 12. Let's go over to the 12, a delta of 12 right here on the 127 calls. And they're not too dissimilar price-wise. They're $1.16, $1.20 in that range. Click on the bid. So I wanted to sell something around 250. 240 is a 12 delta strangle. 12 on the puts, 12 on the calls. 12 and 12 together is 24. 24 subtracted from 100 is 76. The statistical, theoretical chance, if I was risking one to make one, would be a 76% probability of profit on this trade. However, since I can only make 240, let's call it 242 or 243, and my max loss is infinite, my probability of profit is going to be increased by some number, usually by about 20%. So if I was at about 75% before, it's probably going to be up somewhere around 85%. So the way I have to look at this trade is I'm risking infinite to make limited with about an 85% probability of profit in an extremely high volatility environment that it rarely trades at. And it's an interesting trade to use some capital in. So I'm going to move the price down by a penny. It is the exact same interface. Now, I routed it over here, and I'm filled. Just took a second because sometimes they don't bite, they don't bite instantaneously. They just, it sits in the order book for a second and then they bite. What's interesting is, and this is what I want to point out to you as somebody that's viewing the chat today, this is a commodity, a futures option. If you're on Fidelity, for example, you can't do this. If you're on certain platforms without futures permissioning or futures options, you can't do this. On Tasty, we allow you to do everything. That order was just routed to the floor of the CME because there are no off-the-floor market making for futures options. But this platform routes to crypto market makers, CME order books and market makers and spread books, different option exchanges, as well as off-floor high-frequency firms. We route to so many different places, and everything comes through the same interface, looks the exact same to you. So whether you're trading a futures option and everything I'm doing is real. There's none of this is virtual or any of that stuff. So whether you're trading a futures option or a listed option, we did a naked put, a covered call in DraftKings, and now we did a short strangle in crude oil because it's interesting. Let's take a look at our fill right here. I have a lot of fills in crude oil today, but you can see you can always adjust these columns up and down, blah, blah, blah. It's interesting, but this is the last one we traded right here, which was selling this one lot strangle. If we close up this graph up here, you can see more stuff. And yeah, these are all the crude oil trades that I made today. But this is the last one that we just did right now. Close up those filled orders, open this back up a little bit just so we can see everything. And I have no working orders right now. Same interface, same look, same feel, same interface. Okay, that's kind of cool, right? There's nothing, you don't have to get all confused. You don't have to get all crazy. You want to trade a futures option spread? Go ahead. You want to do an iron condor and crude oil? Go ahead. Let's take a look at that for a second. You know what? Let's go to gold. Let's have some fun. Let's do something different. /GC. A lot of you get nervous about certain products. So let's do a limited risk product in gold, limited risk strategy in gold. And let's show you how easy this is to do. And this is a futures option, not a traditional listed option. Doesn't matter to us. We're indifferent, again, to product. So we'll go down here to gold and we'll go to the 25 delta put, which is the 1855s. See the two deltas over here? That's 25. Go to the 1855 delta and I'm sorry, we'll go to 1855 strike, which is the 25 delta. And I'll just, for argument's sake, we'll just do $5 wide, iron condor. And then I'll go over to the other side and I'll do 25 delta on the call side. Let's see where you are here. 25 delta on the call side, and I'll buy $5 away from that. And when I do that, I end up with a trade that has $5 wide strikes and collecting $2.20 in credit, which is not bad, but I like to collect around $2 because that means I have about a 60% probability of profit. So I'm going to move these by just dragging them down one strike. Oops, hold on, one strike. So now I went from the, let's see, I went from the 1855 to the 1850, and I'm going to move these out one strike by just dragging them. Super easy. Now I'm down to 210, pretty close. I'll move this call side out just a little bit more. 190, I like that 210 more. Just trying to get to as close to $2. See, I'm playing with it for a second to see. That's probably a little closer. $21. I'm going to do this. I'm going to go back and move those call strikes just to have some fun. I guess there's a lot of call skew in here. Perfect. I'll leave this. $2 exactly. See, I just messed with the strikes to get to a number that I wanted. And the reason I wanted to get to a number of $2 is because you take $2 is 40% of the $5 wide spread, which means the inverse of that 40% is your probability of profit for a defined risk iron condor. There's no extra, there's no adding or subtracting away from this. It is absolutely theoretically defined. you risk $3 to make $2. You have a 60% probability of profit with, you have 60% chance of winning, 40% chance of losing. Why? Because you can lose more than you can make. So the mid price on this is $2. We could route at the mid price and see if we get filled. I don't think so, because usually you got to move 1 or 2 pennies, but we'll try it. There's no harm. And hold on one second. Oh, hold on. So here's my gold. Here's my gold order right here working. And I didn't get filled yet. And it's showing now mid-price. It's floating around. They're moving it around a bit. So I didn't think I would get filled there. I'll have to move this thing a little bit around. Now this doesn't trade in the equivalent of pennies. So I'm going to leave it in for a few seconds, see if we get filled at $2. And if not, we'll drop it down to 190. They'll move in 10-cent increments. But that's an iron condor in gold. So while we're waiting for that to get filled for a couple seconds, we're going to take a look at, because I want to get as much as I can into, 55 minutes for a software demo on Tasty is really short, but I want to get into as many product types as possible. And I've got you one future, I've got you one stock. And I thought it would be kind of cool just to spend a second to go into digital assets, just to get you a little taste of everything. I'm a huge fan of decentralized, or a huge believer in what's going to happen with respect to decentralized finance and the future of globalization. And in that process, we're all going to have to learn how to use, DeFi, and learn how to accept and appreciate digital assets. So I'm going to go from this table mode that we're currently in over into a crypto mode. Now there's 6 different trading modes on Tasty. You can use a curve mode, which a lot of our customers do, to see it in graphical form. You can use an active trading mode. You can use a chart mode. You can use a pairs mode, or in this case, a little bit of a crypto mode. And I'm a believer in most cryptocurrencies, but I don't really have a strong appreciation of one over another. So I like to sprinkle the infield a little bit with 3, 4, 5, or 6 different currencies. So this is Bitcoin. It's up tiny today. This is Ethereum. It's up tiny. This is Cardano. It's actually a little pretty much on its butt. So if I wanted to buy something, like just to give an example, I will buy $500 worth of Bitcoin, and all you do is just adjust price here and go buy. Then I'll go over to Ether and buy $500 worth of Ether. Then I'll go over to ADA Cardano, buy $500 worth of Cardano. Then I'll see what else. I usually like to buy a little Polkadot, and I usually like to buy some Solana. I mean, I'm open to lots of things, but those are probably the 5 where I prefer. So I'm going to go jump over to Solana and buy 5 for that. And then here's my Polkadot, which is one of my favorites, and buy $500 worth of that. So I just bought Bitcoin, Ether, Cardano, Solana, and Polkadot. 5 different cryptocurrencies. At Tasty, we offer 25. We have the most of any online broker. There are places like Coinbase that's all they do. They have like 50 or 60. We have 25 different digital assets, including physical gold. Now, the neat thing about digital assets on this platform, even though you have to pay for them in cash, they're open 24 hours a day, 7 days a week. The platform's open 24/7, and the platform's, everything we do is free, and our content's free, our archives are free, all our research is free, our newsletters are free, and you can access the platform 24 hours a day, 7 days a week for all the cryptocurrencies and everything else. And so we're able to buy 5 different cryptocurrencies. We click off crypto, we go back to the table mode. We look and see what we're doing over here. We see we haven't been filled yet in in our, we haven't been filled yet on our gold iron condor. We take the price, we lower it by a dime, take a fill. In the world of futures options, everything trades about one tick off mid-price. So here is our iron condor in gold. So now we did a strangle in, and I'm just like taking you through the process of kind of building up a portfolio and things like that. We did a strangle in crude oil. We did an iron condor in gold. We bought 5 different cryptocurrencies, or digital assets, I prefer to call them. And we did a covered call and a naked short put position in DraftKings.
Energy space. All right, having a good day today, up 1.5% on Enphase Energy.
I think somebody just turned on the sound. All right, good, we lost him. I just heard some sound coming in, but it's all good now. Anyway, and that is some of the, kind of really interesting stuff regarding the platform, and some cool takeaways about how A, easy it is to use the technology, but B, how we don't really limit you or restrict you. Like if you have an IRA account and you want to do the same stuff, go right ahead. I mean, if you want to sell a naked strangle in your IRA account in crude oil, we're fine with that. If you want to do an iron condor in gold, we're fine with that. If you want to do a covered call or a naked put in an IRA account, we're fine with that. So we try not to put any restrictions on anything that you want to do in an effort to kind of grow what you have. So let's say, let's just say, for example, I wanted to go back and I want to say, hey, you know what? I'm going to take you back to this DraftKings position just for 1 second, because I want to show you a cool feature, DKNG. Because some of the things that are neat about the platform is we have some things that nobody else has. So I showed you that I did the sold the puts naked and did the covered call, but I have a position on in here already where I'm short some April 15 puts. Now over here, you can see instantly, I sold them at 127 and they're currently trading at 141. So I'm out about 14 cents on the ones that I sold, whatever, I think a couple of days ago or something. But sometimes we like to go back and see the history of our trades. So I'm going to go back right here and click on this word called chains. What we have on Tasty is the ability to look at the option chains for everything that you've done on certain positions. So if I click on chains, I can go back and I can see, all my different open positions. Here's the position I just put on, and this was on the covered call. And here's the 12.5 puts I sold, okay? And here's the open position I put on the 15 puts I sold. And I haven't made any changes to those yet, but I think it's kind of neat that you can see everything that we've done historically and all the trades that are adjusted or rolled forward, calendarized, or diagonalized against any of those trades. It's very interesting. And you can see, you can see your P&L total on all the trades and everything else that comes. It's all built in to the mechanism. Like if I take you to a stock like Tesla, I make a ton of adjustments in Tesla, a crazy number of adjustments in Tesla. And this is one, I have one open position. Here's my position in Tesla right now, small. I have a 30 lot strangle in Tesla, 725 puts, 850 calls. Now, I have been adjusting this position probably 100 times. I may never take it off. Just adjust it 100 times, I may never take it off. I might keep adjusting it all year, who knows? I guess my point is you can kind of see, and you can see how your P&L's doing, you can see everything else. And that's the kind of stuff that makes this platform so special, is your ability to just kind of continue through trades, understanding what adjustments you've made. You can kind of see how you've done, and all that stuff is kind of neat. Nobody else has it. That's what makes it so special. Go back over here and you can see kind of, hey, maybe I want to do something on a short-term scalp. Let's say right now you were like, you're watching the markets, you're thinking to yourself, okay, it's a pretty strong day in the NASDAQ. It's a pretty weak day in the Russell. So, and I kind of am a little bit mixed in the S&Ps. What if I wanted to, I don't know, what if I wanted to trade, for example, like this is the micro NASDAQ, just to show you all the different things you can trade. What if I wanted to trade a micro NASDAQ here? It's strong today. I'm going to click on the bid. I'll lower my price just a little. Filled. I just bought a micro NASDAQ. That's a directional trade. And I'm just taking you through the different steps. But then you go, you know what? That's kind of cool. But I was more thinking that today I wanted to trade a little Peloton. So it's up a lot. Let me see what, there's some stocks in here that we follow that are, like here's a Pinterest stock that I've been following. I have a tiny position there, but the stock's getting beat up. It's crappy. Let's say I wanted to buy some Pinterest, and I'm not going to buy a lot here. Just let's say I bought 100 shares just for the hell of it. And the reason I want to show you this is because the market's only a penny wide. So I'm going to buy 100 shares of Pinterest. I just want to show you the speed, but more importantly, I wanted to show you that the interface that I just used to buy a micro NASDAQ and 100 shares of stock or to sell an option is all the same. We simplified everything. So if I said, if you were going to Pinterest for the first time and you said, hey, you know what? All right, that's kind of neat, but I'd rather have an option position in here. So like, you think Pinterest is cheap? Okay, let's do, for example, maybe we should do a Jade Lizard. All right, so a Jade Lizard is a simultaneous sale of a put and a call spread. So let's say you didn't know that. You weren't sure how to set it up. You just go to this drop-down menu here and you find Jade Lizard, and you just hit go. There's a Jade Lizard. But now you don't like these strikes because you're like, you know what? 50-cent credit's not enough. So I'm going to leave the call strikes, but I'm going to raise up the put. You take the put all the way up to 20. $1.33 is way more interesting. And let's say you said this 5 lot, though, that's too big a trade for me. So I'm going to lower my quantity to 3. And I'm going to adjust my price to 131 and I'm going to route it, take a fill. But I got filled at I routed at 131. I just got filled, you can see right there at 132. So I got price improved by a penny. And I did all that in 2 seconds. But I'm going to go back here. I'm going to set up a similar order, okay? And this time, though, instead of looking at a table mode, I'm going to take you over to a different mode we have, which is curve mode, so you can see it visually inside of a distribution curve. So now you can see I'm selling the put, I'm selling the call spread, I make money in here, and it's just interesting, and I lose money down here. A little bit of money in here, but lose money down here. High probability of profit. What is the probability of profit? Well, 54% here, but a 67, 68% chance of making P50. So you're like, okay, cool. Now I got my Pinterest position on. I like the way it looks. I'm going to go back here to my table mode. Now that I got my Pinterest position on, I probably don't need that stock I just bought. So you right click on the stock, hit close position, hit it, and I'm filled. I did everything from the same interface and I just made 3 cents on my stock. $3. There's no commissions for stock. So I reduced my 3 lot cost by a penny. So instead of doing it at Pinterest, instead of doing it at 132, I just bumped up my basis to 133. That's what trading's all about. All right, that was a very fun and quick little demo. Let me just do one other thing while we're on, because otherwise I will forget about this 1 lot micro NASDAQ, which we made a couple dollars on, and I just closed that one out. And so that way it keeps me kind of flat. Otherwise I won't forget. I'll forget what I did, but we'll keep the other positions. And I think that that's just a really interesting discussion. So if anybody wants to reach me, I am Tom at tastytrade.com. If you want to check out our site, it's tastyworks.com. We have all these crazy specials too. And we just wrote a new book. And if you sign up for a new account, you get that new book. But I don't know everything that John's offering, so I'll defer to him. But thank you for spending the last hour with me. And if you have any questions, you're more than welcome to reach out with trading questions or any other questions about, about Tasty. I'm just Tom at tastytrade.com. And again, thank you for your time today, and have a great week trading.
Okay, Tom, that was fantastic. Everybody benefits from your trading sessions. Hope we have you back in June.
John, I'm not going
and I hope we
anywhere.
have a better market to work with.
John, I'm not going anywhere. I have no life. This is what I do.
I have the same problem. This is our lives, making money for people. It gives you a great jolt to have a winning trade alert.
Well, I appreciate you giving me an opportunity. It was awesome. Thanks, man.
Okay, take care.
All right, John. Thank you.
Okay.